Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in your favorite company's financial reports. And today we have a real doozy, a correction that tells us more than they probably wanted to reveal. We're diving into M3-Brigade Acquisition V Corp's latest filing, a company that's all about bringing other businesses into the fold. So what's the big deal with this report? A Form 8K is basically a company announcing something significant that investors need to know about right away. Think of it as a headline alert for the stock market. And for M3-Brigade Acquisition V Corp, the headline here is a bit of a correction to a deal they inked earlier. It's like finding a typo in a contract and having to reissue it, but with potentially significant financial implications. Now, M3-Brigade Acquisition V Corp, or MBAV as we'll call them, is what's known as a Special Purpose Acquisition Company, or SPAC. Basically, they raise money first, then go out and find a private company to merge with and take public. It's a way for companies to bypass the traditional IPO route. They had a big announcement way back in June when they issued a convertible promissory note, which is fancy talk for an IOU that can be turned into stock, to their sponsor M1 Sponsor LLC. This note allowed them to borrow up to a hefty $2.5 million. But here's where the correction comes in. On July 16th, they issued an amendment to this promissory note. Why? Well, it turns out there was a scrivener's error, a fancy way of saying a mistake made by whoever was typing up the original document. This error was about how their sponsor, M1 Sponsor LLC, could use that note. Specifically, it was about converting up to $1.5 million of the debt into what are called private placement warrants. These are basically special stock options given to early investors or sponsors, usually at a discount. So the original note said the sponsor could buy these warrants for $1.50 each, but the amendment, it corrects that to $1 per warrant. Now, a 50-cent difference on a warrant might not sound like much, but when you're talking about potentially millions of dollars worth of warrants, it can add up considerably. This correction suggests that the initial agreement might have been priced a bit too high, or perhaps the sponsor negotiated a better deal after the fact. It's a small change on paper, but it directly impacts how much money the sponsor walks away with or how much equity they gain in the company when they convert that debt. Let's look at what they actually offer to investors. The company has these units that are bundled together. Each unit contains one Class A ordinary share, which represents ownership in the company and half of a redeemable warrant. Think of warrants like a coupon that allows you to buy a share later at a set price. So for every 2 units people buy, they get 2 shares and 2 of those half warrants, which adds up to 1 whole warrant. It's designed to make the initial investment more attractive by giving buyers a potential upside. Their Class A ordinary shares have a par value of a tiny fraction of a cent, $0.00000 on 1 per share. This par value is mostly an accounting formality and doesn't reflect the actual market price of the shares. What really matters is what these shares trade for on the stock market. And those warrants we talked about, each whole warrant gives the holder the right to buy 1 Class A ordinary share, but at a price of $11.5 above 11.50 cents per share. This is key, because if the company's stock price goes above 11.50, those warrants become valuable. Investors can buy shares for 11.50 cents and then immediately sell them at the higher market price, making a profit. They are listed on the NASI pre-sensed under the trading symbols MBAV for the shares, and 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 MBAVW for the warrants. Being on NASDAQ means they've met certain standards for listing and are accessible to a wide range of investors and buy shares for $11.50 and then immediately sell them at the higher market price, making a profit. They are listed on the NASDAQ stock market, a major exchange under the trading symbols MBAV for the shares, and MBAV for the shares, and MBAVU for the shares, and MBAV for the shares, and MBA. Now, importantly, M3-Brigade Acquisition V Corp is an emerging growth company. This is a classification given to newer companies that are still growing. It means they get some regulatory shortcuts, like being able to delay adopting new accounting standards. They've checked the box indicating they are an emerging growth company, which is pretty common for SPACs in their early stages. So to circle back to the main point of this filing, it's all about item 1.01, which covers the entry into a material definitive agreement. In simpler terms, it's about that corrected loan agreement. This amendment itself isn't generating new debt, but it's tidying up the terms of an existing financial obligation. It's the company being transparent about a correction they had to make, ensuring that all parties are on the same page regarding the conversion price of those warrants. Then we have item 2.03, which deals with financial obligations. By referencing the information in item 1.01, they're essentially saying that this corrected promissory note amendment is a direct financial obligation that the market needs to be aware of. It's confirming that the company has these financial arrangements in place. Finally, item 901 lists the exhibits. This is where you'd find the actual documents, like the amendment to the promissory note itself, filed as Exhibit 10.1, and then there's Exhibit 104, which is the cover page interactive data file, often called IXBRL, that makes the document machine readable for regulators and data analysts. Now, let's put on our Warren Buffett hat and think about what this means. This filing, while seemingly minor with its focus on a scrivener's error, highlights a few important things about M3-Brigade Acquisition v Corp. Firstly, it shows that even in the SPAC world, precision in documentation is crucial and mistakes do happen. The correction of the warrant conversion price from $1.50 to $1.50. To $12 NRNs is a 50-cent reduction per warrant. If the sponsor converted the full 1.5 million more warrants than initially stated, imagine if they had 3 million warrants initially, the difference would be 3 million warrants. This directly increases the sponsor's potential equity stake and leverage in the company. It suggests the sponsor is keen on their investment and made sure the terms were favorable. The fact that they are issuing this amendment indicates they're operating with a degree of caution and want to ensure all their agreements are legally sound and accurately reflect the intended terms. It's a good sign of responsible management, even if it does point to a small slip-up in the initial paperwork. For investors looking at MBAV, the core business is still finding that target company to merge with. This amendment doesn't change their fundamental strategy, but it does tweak the financial details for their sponsor. What are the risks here? Well, for any SPAC, the biggest risk is failing to find a suitable merger target. If they don't find a company to acquire within their time frame, the money raised might have to be returned to investors. Also, the success of MBAV largely depends on the performance of the company they eventually merge with. The warrant details are important, but the ultimate value will come from the operational success of the combined entity. The 50-cent adjustment in warrant price, while financially beneficial to the sponsor, is a small indicator of how the economics can be fine-tuned. They are essentially reducing the cost for the sponsor to acquire more equity, which can be seen favorably by the sponsor but needs to be balanced against dilution for common shareholders. In conclusion, this filing is a minor course correction for M3-Brigade Acquisition v Corp, refining the terms of their sponsor's convertible note. It's a reminder that even with complex financial instruments, the devil is in the details, and sometimes those details need a little edit. For MBAV, the real story is still about finding that right acquisition to take public. This amendment solidifies the sponsor's stake, making their commitment clearer. What's your take on this warrant price adjustment and its implications for M3-Brigade Acquisition v Corp? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more insights into the world of finance and corporate filings. And don't forget to join our Discord community linked in the description for more discussions. Thanks for watching, and I'll see you in the next one.